Hello and welcome to Europe's Tech Stories from Series E, an audio and video podcast series highlighting important stories in the world of Europe, startups, its entrepreneurs, investors, and ecosystem leaders. If you aren't already subscribed, head on over to your preferred podcast platform and search for Europe's Tech Stories and give the podcast a subscribe. There you will find all of our past discussions and interviews. I'd like to welcome our guest today, JD Nietzlech from Iris. Did I get it
Hello,
that time?
Chris. You did it perfectly this time.
I don't think it was perfect, but I think it's the best I can hope for at this point in my life. Thanks, JD. Thanks. Good to see you. Um, let's start with the basics here. Iris is obviously a well-known name in the European ecosystem, but for those who don't know it, who aren't familiar with it, can you just give us a little bit of the history there, kind of describe the mission, the focus, and then talk a little bit about your role there?
Iris is both a long story and a short story. It's a long story in the sense that it's been around for more than 30 years. It's a short story in the sense that it's always been doing the same thing. Iris always has been financing tech platforms that transform their verticals throughout times. So what it means is we're a team of tech experts, people who have been in tech for at least 15, 20 years. Even in the younger stages of the team, people have been operating either businesses or have already had experiences in tech. And as experts, we like to spot and accompany tech assets, so large tech platforms that provide an edge, a transformative edge within the industries that they operate in. So, and they must be operated, of course, by people who are both skilled in tech but also skilled at the market they've chosen. This is how typically we have finance companies like Shift Technology providing major AI, transforming insurance in general, Exotech, robotic engineers who have built an amazing technology transforming and enhancing the way you operate warehouse systems for typically e-commerce or grocery. This is how also in Germany we've accompanied platforms such as Forto, which enhances the freight forward out of Germany towards China and many locations. We find large tech platforms or tech assets that provide large scale, and we back them and accompany them in their development. As tech experts, we have the luxury of being able to operate early ventures or late stage and growth companies. So we manage both early stage funds, funds on which we deploy 1 to 10 million euro tickets in France and Germany, because we believe these two countries are key to a European development. And on these companies, we focus on seed and Series A stages. So typically what we call the first institutional rounds. We help them scale, become international. With the growth fund, we invest 5 to 50 million tickets in companies that are scaling beyond the Series B, Series C. So they already have an asset and a trade, and they're turning into scale ups. We do this out of our French and German offices, but to accompany European businesses. We've been doing it for a while. So right now we manage around 900 million euros, and we have a new early stage fund doing more of the same things, which we've already financed companies such as Spinergy, allowing for decarbonation and reporting for a fleet on the seas. We've been funding companies like Cohort, providing Web3 tools for uh, loyalty and basically brand management on SaaS. These kind of assets that we accompany throughout time and space.
Yeah, and I think it was the I think it was a seed fund. You guys made an announcement in December. Is that right? The
It's
150 million fund.
it's a venture fund. So venture fund, you can get VCs talking about ours as to what seed, pre-seed, or Series A is. What we do is post-traction, early stage. So right now it qualifies as seed and early stage, typically rounds from 1 to 10 millions. That allows the company to usually scale from the first product market fit they have found to more than just national or more than just one specific traction.
And so, how do you get those companies on your radar? Because even with the economic crisis, and we'll come back to that in a second, or the maybe not crisis, but the change in the economy and funding evaluations. I hear a lot of people talking about that early stage, whatever we want to call it, pre-seed, seed, Series A, still being pretty competitive to get into. So, do you guys have kind of a methodology, a system for surfacing those companies, or how does that work from your perspective?
So that's a good question. First of all, regardless of what we call the economic conditions and whether there's a turnaround or not, I'll be happy we discuss that. For us, what has changed is the market has become very industrial. From 10 years ago, where still like launching startup was not a couple of misfits guys, but basically something that was not quite usual. It has turned over the past 10 years into an industry of people going out of school and building right away very interesting tech companies, being able to scale, find customers, or people coming out of corporate environments and doing finally their own venture. So all this to say the market of building startups has intensified, and the fact that there's been a lot of money to support that also has contributed to making it more intense. So we live a time where production of startups is quite systematic and many startups appear every day throughout the radars. So there are three ways to source startups today. One is being systematic in terms of thesis, reading the press, reading you, Chris. Every day, new paradigms appear, new needs appear, new names show up and show that they can gain momentum, that they can gain interest from corporates, from B2C players. Happens. Second thing is now we've seen that the market has become very tech also, meaning that on LinkedIn, suddenly somebody leaves a startup on which they were C-level and puts working on something new or in stealth mode, and suddenly, well, here you go, you have a new startup beginning and you need to be able to address it early. So many of us, and Iris definitely, have put in place automated tools that allow us to spot innovation appearing, trends appearing, new names, new companies potentially being built. The third thing is our network. Venture is a very open game that welcomes a lot of people, but it remains an experience game which has one rule, which is network. Network of information, which you are part of, network of contribution, collaboration, network of investment. So usually you find companies out of reading, out of automating, sourcing of companies. But the truth is your network, the network of entrepreneurs, the network of people being at tech every day will hint towards what's being happening, what's new, the kind of companies that are building momentum. From an ecosystem with limited number of investors and players, we have turned onto an ecosystem with a lot of pre-seed players, business angels, family offices. There were lots of articles about this last month. And so all these guys, they fund very tiny early ventures, but then they want them to scale, they reference them to us, or we've heard about them. And our job has become to be able to spot them early and exchange with them early, especially if we don't invest in pre-seed, because that gives us time to see what their program is and whether they're able to start developing it to provide new or first insights, first customers, first proof of traction. So yeah, from let's say something quite, adaptable in the past, it has become very systematic to source all the time new innovations and new companies.
You mentioned business angels, and I want to ask you a little bit about that because I obviously from Paris have a bit more of a closer view to the French ecosystem. So I'm not sure how much this has evolved across Europe, but certainly here the last 4 years, we've seen a real radical expansion, I would say, in the number of business angels, which I think is a result of a lot of factors, the maturity of the ecosystem, some repeat entrepreneurs, the secondary markets emerging. But as a journalist, when I'm getting press releases now, particularly in those early-ish stages, it's common that there's going to be maybe a half dozen business angels listed in there, in that along with some funds, maybe some institutional investors. That's been a real sea change here in France. So 2 questions on that. Is that something broadly you're seeing, at least in Germany or European wide as well? And second, you kind of hinted at it a little bit there, but how does that kind of change how you work with them? Are these people partners, rivals, a little bit of both in terms of some of these deals?
Good question. So, number one, France, Germany, and Europe all over, it's a story that you and I have been covering for a long time. Basically, we've had a first generation of entrepreneurs, end of the 90s, that have bred the first proofs that you could build something strong and lasting. And the first thing they did their name is Jacques-Antoine Grandjean, Xavier Niel in France. So they've been investing their money in seed deals, trying to generate a second generation of entrepreneurs. I think today we're at the fourth or fifth one, because really the second to third generation occurred at the moment Facebook happened. The network, the social network movie kind of generated a lot of a willingness, and more importantly, the crisis of 2008 generated this very positive environment, surprisingly, where we started from afresh, but the rates and the debt was very cheap. So you had a lot of money coming into venture, and suddenly you had this breadth of amazing companies showing up between 2010 and 2015. So many unicorns in France and Germany have showed up. So these companies have generated two things: financial returns that you needed to reinvest, because first thing tech entrepreneurs do when they gain their money is to reinvest, A, for tax reasons, B, because that's the only thing they like to do, being able to breed new opportunities of tech. The second reason why it popped up is you have all these people who were part of these adventures, managers, C-level, who saw tech appear, scale, grow, become a huge business, and they were part of that, and they said, it's my turn. So they left these companies and become from manager to entrepreneurs all of a sudden. So this, let's say, cycle of success has been accelerating both in France and Germany, which have very parallel and complementary stories and approaches in terms of companies, in terms of entrepreneurship success. And so in both countries and in Europe in general, what you see right now is generations of entrepreneurs breeding generation of entrepreneurs for operational reasons. Hey, I was a manager at whatever stylish startup, and you know what? I've been doing this for 3 years, and then I met my co-founder, and we think that we can change something in the market of blah, blah, blah. The second thing is successful entrepreneurs having done secondary or having sold their companies have money that, as you know, in France, for tax reasons, is relevant to invest. But more importantly, what else can they do? They like tech. They've been funded themselves. They see all these projects that make sense. When you scale up a company, you move from being the innovator, the transformator, to having to deliver a sustainable and constant performance on a mature product. So seeing other people innovate is something that you want to invest in. And the Thibaut Elzière, the Nicolas Stegman, all these guys, the Amir Malekzadeh, have been strongly operating. So that's answer number one to your question. And we see these environments both in France and Germany. Founders of Differendo, one has built, Christophe Gerber, a great new company, which is Talon1, which we have funded, but he's also a very active business angel. We see so many of the founders that we have backed over the past 10 years now back companies and refer them to us. But also what has changed in that ecosystem is that you see more and more family offices. When you operate as a business angel, you've got your Excel spreadsheet, you will meet 1, 2, 3, and at reaching 20 companies, you'll kind of become tired because, hey, what are you going to do? Family offices is something that has existed for a long time in the US, and now it's starting to show up because you have all this money to manage and to deploy in a short amount of time. So we see more and more people being structured as family offices to be able to industrialize the sourcing of the opportunity, its treatment. And for these founders who are still operational in their companies, think Alexi from Zenly, think all these guys, to be able also at the same time to reinvest and to make their bets. So you see typically the Motier, the Purple, the Show, all these guys that we've seen recently, quite active on this space, which brings to your second question, how do we collaborate with these guys? So first of all, I think there's a major change. There have been very interesting studies about the power of network in VC. And so fact is, VC has become very crowded rather than competitive. It's just a huge space. There are so many people willing to deploy cash, but the nature of the cash you deploy is very different. In the case of an entrepreneur or a family office, it's short time because there's the tax incentive, but also there's only a limited amount of time that you can spend. So your interest is to be very collaborative, A, to share deals, to be able to analyze them, B, to make sure that these companies you have seeded have a chance to succeed with people like us. But at the same time, we remain the same. We manage large amounts of money that we need to deploy. That is our entire and only daily focus. So for us, not much has changed, except that the sourcing is more diverse, that we can collaborate with more players. So from a collaboration standpoint, these guys who come in are much more collaborative than what the former guys used to be. But we, at the same time, have always been collaborative with these people. And we have an interest to be so because they will bring us the next companies. We can bring scale to some of them, help to many of them. And yeah, venture people like to believe that venture is now for granted because there have been so many unicorns, so many successes. Truth is, there's still a failure rate, and as you mentioned, economic conditions are changing. There will be failure rate, and so our job remains risky. And one thing that is good is to share the risk with other people because you take risk on large bets. You want to be ambitious. Being more around the table brings more skills, more knowledge, more money to last in periods where cash will be lacking or leaving.
Yeah, it was interesting. Last year, I remember about this time, I was listening to a co-founder, I won't say who, at a conference, uh, but her company had raised, I don't know, like a crazy, like 100 million Series A or something, just kind of round that just was still seems shocking at this point in Europe. And, she was sort of giving some advice and saying, you see all these headlines, you see all these press releases, and it can give a young entrepreneur the impression that the money is just so easy to come by and it's just out there waiting to be grabbed, and it sort of masks the reality that for the bulk of entrepreneurs who don't have these networks, who are fresh, it's a struggle to build those networks, to find those people who will put that early money in. And so when they get it connected to some of those business angels, at least they're really looking for certainly the money, the operational help, but also in their minds, hopefully intros to people like you guys that gets you, that they're not just sending a cold email to JD at Iris. It's going to be one of 100 he gets every day, but someone who'll sort of validate them a little bit and said, hey, you should really take a look at these people because they're doing something interesting.
There's one word that comes to mind when I listen to you, which is one of the least used word in our industry, and it should be the most, which is qualification. I used to be a salesperson, and the first thing you do when you have an exchange is to qualify it. Is it relevant or not? Am I the right solution? Capital is something qualified, both in terms of orientation, purpose, and skills. So what you mentioned in the fact that on pre-seed, there's a lot of players willing to cooperate. The thing is, having access to qualified capital, meaning the match of offer and demand. Hey, I want to deploy money in companies, but I have a certain angle. I like gaming because I'm a gaming expert. I can do social networks because I've done that before, versus I can do big, bad, heavy B2B SaaS that sells automatically with marketing. Very different stories. You create a company, you have access to plenty of money, and yet not so much is fully relevant to bring you more than just money. An entrepreneur I highly respect, Philippe Corot from Miracle, always says money has no flavor, which is both true when you have a company from a certain size and you know very well what to do. But it's also untrue when you're a very tiny company and quite a young entrepreneur. And this is the first time he or she decides that they're going to enter that market, and they're looking for skills into marketing, knowing how best to sell SaaS. So the first thing that I hear when I listen to you is lots of money, and yet not so much money that's going to bring me more than just money. And yet it exists. And when you're a very pre-seed or seed company, you need all the help you can get. And help is qualified because there's stuff you're going to be amazing at, and there's plenty of stuff that you haven't done before and that people have done before. Then once you have onboarded people and you grow and you have traction, we remain a very professional and skilled business with themes and orientations. Not all funds are relevant for all companies. So as you said, having a qualified intro to us versus funds that will specifically focus on food for B2C, which is absolutely not our focus, is essential. So, and it's interesting on the new fund that we have, the 150 million fund you mentioned earlier on, we've already done 5 deals, out of which 2 or 3 are public. On each and every of these deals, first of all, there was an intro by entrepreneurs or family offices or people we knew that were discussing with the company. It was qualified, meaning that these people called us and said, you should look at this, I think it's right for you. And the deal was struck extremely rapidly in all occurrences because we met them, and after 5 minutes we're like, not only is this relevant, but yeah, the team is amazing, period. Usually the decision of investment takes a long time from a process perspective, although the last deal we did that in 2 weeks. But the truth is, as an investor, your feeling is set after 5 to 10 minutes of conversation. Then you spend a lot of time confirming or infirming it. The second thing is on each and every of these 5 deals, we co-invested either with funds or with family offices or entrepreneurs who are completing the scope, the skills, the knowledge that we could provide. So there's not a single deal today that you do as a one unique VC being able to cover all the platform. All the deals have become highly collaborative and they've been done pretty much at the moment of introduction. So actually, I think it meets your
Yeah.
explanation.
Let me, by the way, you mentioned Miracle. One thing that caught my eye in the press release for the 150 million fund is it mentioned Adrian Nussbaum, the other co-founder with Philippe of Miracle, and along with a handful of other individual names who are successful entrepreneurs that we were just sort of talking about. Is that a new thing for Iris that you're seeing individuals like that, along with a lot of the names I would expect to see Publicis, BPI France's LP? Of course, you would assume those people are probably in the LP structure somewhere, but people who are those kind of successful entrepreneurs who are kind of not just obviously at a stage of doing business angel stuff, they're probably doing that, but at that level that they can become an LP in a fund like that.
So for us, it was both a goal and an honor in a sense that today to build a modern venture firm, as I told you, it's very collaborative and interactive. So you need a network of people you want to work with, you're going to look at deals with, and who want to collaborate with you. All of the people who are in this press announcement, should it be Cyril and Grégoire from Process Out, should it be Amir and Patrick from respectively Logmatic and Food Cherry, should it be even Pierre-Alain from Santian, we have a flurry of entrepreneurs and founders whom we have interacted in the past. Either we have funded them, Jeremy from Shift, Fred from Netatmo, and now they reciprocate. We believed in them, Yanis from Adot, and they say, well, it's your turn to launch a fund. This is actually the first one I was raising as a managing partner, because that's what I am now at IRS. They said, you know what, you've seeded me and it was successful. I come with you. But what I expect out of this, for many of them, we haven't funded them, Amir, Grégoire, Cyril, but we've been collaborating ever since we met these companies. We've been providing help because either we knew them and they needed things we knew how to do, or we've been collaborating. Some of them have invested in companies we looked at that were too early for us, but we really liked them. And we were like, you should meet this guy because he's going to help you a lot. And actually, funny thing is, Amir invested in Process Out because I knew one, I met the others. And so they invested in the fund, both because honestly, I'm an entrepreneur. They decided to fund and support, so I'm honored. But at the same time, they were like, let's work together. Let's do this thing seriously. So the last deal I signed this week, we closed it, was a deal that I've been pursuing for the past year in the space of DevOps and tools that provide more security. Very early, I loved the company from the start, but they didn't want to raise outside. And they made this band of entrepreneurs who said, you should raise, you're going to go international. And they came to me saying, I heard we could do something, and we fixed the deal in 2 weeks. So these people invested in the fund because, hey, they also see new teams, and somehow we're a new team that's been around for a long time, but also we've been collaborating from a long time. It's been efficient. It's been successful. We want to work at it again. So each and every deal that we look at, if it's too early for us, we're going to send the deal to this crew so that some of them look at it, perhaps invest. Yves from KDS, formerly now from Snapcar, Yves Wesselberger, he's a very active business angel. We looked at deals together in the past. He invested in the fund. He receives many deals, and we exchange on a regular basis. So, but honestly, we remain, the way we live venture at Iris and personally is we're an enabler. Some people's skills are to initiate new ventures and scale them. Some people's skills are to be managers and help structure these companies. Our skill is twofold. One, we can find capital that allows us to accompany companies that we find great. Two, we understand tech, and once in a while, we think that the money we bring can generate more value and accelerate business. we're one of these enablers. So we're part of a chain at the same level as all the guys I've mentioned. And so investing in our fund just allows us to invest in the next guys who will invest in the next guys. It's a chain.
Yeah. Yeah, it's interesting. You're sort of describing on one hand the sort of that industrialization process of the ecosystem and how that affects your own process of investing, that sort of methodical part. But then there's another part. It sounds like you do have to be sort of adaptable and creative to also get a certain number of those deals as well, not just being so focused on here's my tunnel, here's my method, here's how to invest. You've got to be able to move outside that from time to time to chase a company for a year or strike when something falls in your lap.
True, I have one saying for the team. I have several because you need to have mentors. Si tu es au bureau, tu fais pas ton boulot. Our job is not to be at the office looking at the screen waiting for things to happen. Our job is to be outside in accelerators, incubators with entrepreneurs, just bathing in tech because that's how innovation happens. And our job is to pursue innovation. So we're no different than entrepreneurs or managers.
It's funny because my first editor in newspapers many years ago said the same thing. News doesn't happen in the newsroom. All right, so one last area to touch on here, the world today. We've referenced this a couple of times. Obviously, it's a big topic of conversation with the change in the economic climate. We hear a lot of people talking about how investors' criteria have changed, and I imagine that varies at different stages. But you entrepreneurs writing LinkedIn posts saying, I'm gone from hypergrowth to conserving cash to focusing on being profitable or break even, et cetera. So maybe just kind of looking at your actual portfolio at the moment, how are you guys kind of helping to navigate that? Was there kind of a review? Are you touching base with folks and saying, okay, maybe these need to rethink their model a little bit. These other people, they're on a good path. They're fine. We're not too worried about them. Or is there that kind of review, rethinking process happening?
There is, but there always is. Being there for a long time and personally being in tech for the past 25 years, we consider that cycles are cycles. They go up, and what goes up must come down. The path of a sustainable companies is always a mix of choosing when to be aggressive and grow and when to be reasonable and wait while still building value. In none of these occurrences do you renounce one, developing your asset, extending your runway, extending your growth. It's just that depending on the periods and the opportunities, you prioritize one towards the other. So at Iris, the funny thing is, small bracket, in 2020 and 2021, we did actually about 2 or 3 deals a year. Why? Because we thought the market was going completely crazy. At the time, everybody was saying we're not doing anything. Everybody was doing 20 deals. It's just we found the market overrated. It was very hard for us to operate. Right now, the market is said to be hard, but the truth is we think it's a correction. We think that suddenly people realize that valuing both a SaaS business that does 20 million ARR or a hardware business that does 100 million at 1 billion plus is actually not reasonable because they're not the same nature of businesses. So answering clearly your question, review of cash, making sure we stay both focused, bold, but also prudent on cash use is something we've always done. Definitely at the beginning of COVID, there was a huge review. How long can you last? Because we were in an environment of complete unknown. Right now, we are not in an environment of complete unknown. We understand very well what's happening. What's happening is beginning of 2022, after 2 years of very strange activity where people are stuck at home, so the gross value generated by companies and countries was growing but moderately. Cash has been distributed heavily on the market. So cash was available, valuations grew, size of rounds grew, but the truth is the economy itself was not developing indefinitely, it was developing moderately. Beginning of 2022, between these events, the fact that suddenly supply was in short availability, but also a war occurred that not only impacted our morals and concerns for human well-being, but also it impacted the supply, the capacity to produce in Eastern Europe. Suddenly, something happened that we hadn't seen in years, inflation, prices got up. And the only thing you can do when you see prices got up is suddenly you raise rates of debt. Debt was negative until the end of 2021. You were paid to take money in debt. Suddenly, rates became positive, and suddenly they kept increasing. And suddenly, the market of debt has become much more interesting to invest. In parallel, the world of equity, our world, had been deploying tremendous amounts of cash on a market that did not correspond in terms of value generated, because you can only generate so much growth. Well, suddenly rounds were moving from 10 to 100 million, as you mentioned. 10 million in seed, suddenly 100 million in seed. So what we've seen in 2022 is an adjustment of the value of tech, which is still tremendous, but to the actual value of money. We've put a lot of money on the market, did not generate a lot of money. Money is cheaper. So people who have raised large rounds right now are worth less than when they did that, not because they did anything, because the value of money has been impacted. In this market, fundamentals remain, meaning that if you have a company that grows, that develops positively, that shows a capacity to aggregate value, to maintain it, to make it last, and to make it throughout time, you have a valuable asset. So tech valuation has been impacted, and you can see that because when you look at CAC 40 and all the indexes, you could read this week that they were hitting new highs. But when you look at the NASDAQ, so valuation of pure tech companies, it's still 30% below what it used to be mid-2021. This demonstrates in a nutshell that valuations of the market have not drastically changed. Tech valuations have gone much lower. And when we started beginning of 2000, the valuations were impacted, but this way. This time it's a 30% valuation modification. It's a correction. So the world of valuation is being corrected. The world of money is being impacted, and also very large growth funds who have been overexposed are people like private equity, crossover funds who were deploying cash both in public and private markets have withdrawn because the cost of the debt, A, is much more attractive than their product. There's no IPO right now. Or for private equity players, LBO players, large funds, the price of debt doesn't allow them to maintain the business model they used to have, which was a leveraged business model. So on the end of the funnel, meaning large ventures, large private equity funds, there's no funding there anymore. So moving back to what you were saying, when you have a Series A, Series B company, you're much less certain that you'll be able to raise the next round that you used to be 2 years ago because there are less people. So suddenly, as you said, when you're in Series A or Series B, when you start investing, you look in the future and you say, am I sure I'm going to be able to find money? So suddenly your perception of the value generated and your willingness to pay for it is very different, because what you value is the fact that you're going to invest money. And if you don't find money in 1 year, you still have 1 to 2 years runway. So suddenly we VCs, instead of talking about 100% growth, building t-shirts and being bold, we talk about being profitable and reasonable with cash. That's all there is.
And that doesn't sound like then it's required some sort of drastic tone change with your portfolio, or you sort of issuing dire memos to founders saying, like we've heard about from certain corners in Silicon Valley, saying the world's changed and you have to change course and keep up with it.
No, for us it's an upgrade. We used to be boring. Now we were visionaries.
All right, well, I'll end on that optimistic, upbeat note for you guys. JD, it's always a pleasure to chat with you. It's great to catch up. And I know you guys are having an event, I believe, next month in Paris.
Yeah,
so hopefully I will see you there. Yeah. But thank you for joining us, and thank you for everyone listening to Series E, Europe's Tech Stories. I'm your co-host, Chris O'Brien, and we'll be back with more great tales from entrepreneurs, ecosystem leaders, and investors. Thank you for listening.
Thank you, Chris.
Want more news and stories from across Europe's incredible innovation ecosystems and its entrepreneurs? Subscribe to Series E on your preferred podcast platform and switch on notifications to be informed of new episodes as they are released. Don't forget to sign up for the newsletter on the website or Twitter to receive new articles, resources, podcasts, and videos direct to your inbox. You can connect with Chris and me on Twitter and LinkedIn. I am at Ethan Pierce, that's ETHANPIERSE, and Chris O'Brien is at OBRIEN. Let us know if there are guests that you would like to see on the interview podcast, as well as any stories that we should take a look at. As always, thank you for listening. We will see you next time.